What makes day trading gambling? Unpredicted outcomes, short-term focus, big risk and losses, misleading success stories. So something you see commonly in trading and in gambling. What makes day trading not gambling? Using trading strategies, risk management, continuous learning. This is the most important one. Winning more than you risk consistently. I want to move into how we can look at the market as a professional and capitalize from it, right? Just like professional gamblers do. They are consistently winning more than they're losing. They have a defined edge, and they're not betting when their edge isn't present. Wouldn't you say that this is all the same things that we should be doing? I definitely think so. Another thing they are doing is testing, testing, and testing. Something we need to be doing in our trading is back testing each and every trading strategy we are going to be using. Skew the odds in your favor. This is something I say all the time. Why aren't you doing it? If you have the ability to change the risk and reward, then do it. That's why we can be profitable as traders. Otherwise, you're just gambling and you're unlikely to be profitable. Something that really changed my view on trading in general was this quarter flip experiment done by Futures Trader 71. Now, if you're a volume profile trader, you're probably really familiar with this guy. That's him right here in the volume profile, kind of like market profile area. He is not quite as big as ICT, but he's definitely very, very popular and a well-trusted trading educator. In this video, he flips a quarter and then goes long if it's heads, I believe, and then short if it's tails. Either way, though, I'm going to play this clip. Hopefully, I don't get a copyright strike, but I think you guys really need to check it out, and it's very eye-opening.
Are aware of, this coin toss exercise is the most important and the first exercise that prop traders will do for a long period of time. They sit there and they just flip a coin and they do it in a simulator, and then they move on to other exercises. And the concept we're looking at here is how the market responds to randomness, because the market ultimately, the outcome of every trade is random. And the way I suggest traders day trade, this is for day trading. Scenario 3, 2 lots, 10 tick stop on the 2, 9 tick scale, and 14 tick target for either a 0.9 or 1.15 R return. And so it starts out pretty good, right? Lucky flips. Looks like short, then long, 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 short, 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 and so on, regardless of what the market is doing. And as we run through the trades, we see that, it's not too bad staying in the yellow. And we finished the day on random entries. We finished the day on a plus 0.74 expectancy, 75 cents per trade. You can see here. And then finally, we have this one lot, 10 tick stop, 15 tick target, run on the MNQ on random flips with a 1.5 risk factor. Remember, we're not really trying to make money here. This is an exercise in looking at the impact of how we start off pretty good. We've got a streak of wins, pretty decent. And then we get into negative territory, row 31. So the 30th sample,
reward greater than risk, you have
count size versus rotations versus all that cool stuff. What is really impacting the fact that this one lot ended up not straying too far? What is the point?
Okay, so there you guys see that using the kind of risk management that I teach, it comes from him. I didn't really think about it until then. It's just something that I slowly implemented. I guess it comes from him actually. But you can see here that flipping a quarter with the right trade management style results in a positive return. And he's just like flipping it interlong, short, interlong, just enters. Doesn't think about what the price is doing or anything like that. risk versus reward, because that is the one thing that separates us from gambling, right? So it's probably the most important and the one we should really focus on. So a 1-to-1 risk ratio, for example, you risk $100 to make $100 with a 50% win rate, is going to guarantee you blow up because of risk of ruin. Risk of ruin is the chances of multiple losses in a row happening. So as you can see here, at first it starts off really good. The person goes into profit, everything seems like it's good, but then the odds of consecutive losses start to play out. And as that happens, you slowly but surely take losses and you can't get back above because your R&R is low. And now, because you've watched this video, you're going to adopt a pro gambler's mindset and you're going to trade this with risk and reward in mind. You're not going to allow yourself to risk more than you're willing to make. So this is another example where it is a risk 1 to make 2. For example, risk $100 to make $200. You see the difference here? Huge difference, right? You have a gradual up incline. Every time it goes down, it is able to come back above to an all-time new high because it's making up for your losses, guys. And this is why understanding that gambling and trading are a lot alike. The only difference is what you do with your trading regarding your risk management, right? Because it's never guaranteed. Get that out of your head right now. No ICT, no SMC strategy is guaranteed. And never ever trust anyone's statistics, guys. Question reliability, be skeptical, do your own due diligence, and be aware of survivorship bias. Gurus often highlight wins over losses, which can mislead. They're not going to show you the losses. I'm like one of the few traders that will show losses. I will speak to you about my problems in my trading. Never trust anyone, not ICT, not me, not anyone. Do your own backtesting because everyone trades differently. Marketing versus reality. Traders and gurus especially are going to hop on YouTube, they're going to hop on Twitter, and they're going to act like they're a master strategist. That's why you see 95% win rate. Oh, it's a 88.2% win rate. They're just making that shit up, guys. I had a guy in my group the other day tell me that all ICT concepts are a 95% win rate. Like, come on, guys. Don't be so fucking naive, guys. You're smarter than that to think that 95% win rate on all ICT concepts. And then the dude even went on to say, but you just have to be really picky about which ones. That's how it comes out so high. That that's not how trading works, man. And that's not how backtesting works. You can't be picky. You have to have a set of rules, especially for backtesting, that you enter on, and that's it. You don't pick which ones look best or which ones seem better. That defeats the purpose of backtesting, right? So, how to develop risk management skills that allow you to trade like a professional trader. Instead of just looking at the market and be like, okay, I could enter here, I could sell here, that seems like a good trade, you're going to think about it in terms of risk. So, if I enter now at this red line here, that is going to mean I'm going to have to put my stop right here. I'll probably put it below this candle's low here, 2.0. So I'm risking 5 points. Where would I take profit at? I'd probably look to get out somewhere up here. So that's a 2R trade. So as soon as I see a little bit more confirmation here, I'll go ahead and enter. And then just as you guys saw with that coin flip, scaling out drastically improves your profitability. I don't know any profitable traders that don't scale out. I'm not legit. Name one, and I'll ask him to show me the proof because there's no fucking way. You have to scale out. And traders that say they don't have to or they're all out are fucking liars and they're not profitable. They're sitting in their mom's basement fucking asking her to make her a sandwich. They ain't pro traders. All right. So right here's my stop. Let's adjust this now. So I'm going to exit my first one at 1.5R. So it's right about here. And this guarantees me a 0.5R on the trade. So just wait for it to get up a little bit higher here. All right. So there's my first scale out. Now where is 2R. So 2R is right in here. Does that mean I'm going to set a profit target there? Fuck no. I'm not going to set a limit order to get out. The market's spooling up. It's doing exactly what it did here, so I'm going to let it take out this high. But I'm going to be aware of where 2R is at, where 1.5R is at, where 1R is at. So I never want to get out before this right here, 1R. Anything below this is, as you saw, guaranteeing failure. So that's a no bueno. So now, because I'm thinking of price as a professional trader, right? Just like a professional gambler would, I am looking at my edge. So I know my edge has about a 60% win rate, 62, and then some days even as low as 45. It depends on the price action. It depends on my abilities that day. Some days I'm more in tune with the market than others, especially on Mondays like today. I'm pretty in tune with the market, and my win rate is probably going to be a little bit higher than 60%. Thursday comes around, I'm a little bit more tired, starting to get burnt out from the week, and my win rate's more like 52 to 55, somewhere around there. It's not very high, so I have to take that into consideration. Today, my win rate's a little higher, so I can get by with exiting at 1.3 on the first one. You should always be focused on this. Staying this in this set of mindset. It's called having a growth mindset, meaning you can get better, you can improve, you're continuously trying to learn. You're like a sponge. You're just constantly soaking up information. Some of it bad, throw it away. Some of it good, take it in. Some of it bad, and your brain's going to retain it, right? But if you're sitting here with just a fucking closed mindset and a I don't even know how to explain it. I don't even know what these guys are doing. Anyways, if you have a mindset that isn't allowing you to grow, you're not willing to look at different perspectives, you're not willing to do anything but listen to ICT or someone else, you're gonna struggle, man. You know, I've learned so many different strategies coming up, and I tell you that a good 50% of my trading comes from that, like Al Brooks, the strat, market profile, volume profile. These are all strategies I got really into. Order flow. You know, these are all strategies I dived into. I spent at least 6 months on each, if not more, maybe a year on a couple of them, especially volume profile, market profile, and the strat. Those two I spent so much time with. And Al Brooks I found first, so he definitely contributed a lot to how I look at price. And then I found ICT and I absorbed this shit like a sponge. I spent a good year of my life fucking obsessed with this shit. Did I throw away the old shit? No, absolutely not. Did I hear ICT say, "Oh, trend lines don't work. Um, it's just noise. It's lipstick, Mickey Mouse shit." Did I take his word for that and disregard everything else I just spent years learning? Absolutely not. Did I take it in and see if it was true for myself? Yeah. Yeah, I tried it out. I took all the indicators off my chart, which I'm thankful for that. He was absolutely right about that. Um, I took trend lines off my chart for a while, but then I realized that his concepts were starting to fail more often, while trend lines are starting to work more often. And then I was like, oh, well, shit. And maybe I should test out trend lines. I did testing. I found that, wow, they are smoking SMC ICT concepts regularly now, which that's what my next video will be about. I'm going to make a video and prove it to you that trend lines and these retail concepts that have been, um, you know, told that they suck, they don't work, actually do work now, because the new traders are trading ICT SMC, which honestly it sucks because I really like ICT and SMC, but it's just not working like it used to. It's just a fact. So that's what my next video will be about. When I first got into trading and found funding, I had such a hard time with some companies. I got burned really bad by a couple of them. And the other few I tried had really, really strict rules, and that fucked me up. So I spent, a really long time, almost a full year, failing with a couple companies that make it almost impossible to pass. So once I found a good set of companies that I trust and I went with, I made a website, and these are companies I absolutely trust. Hands down, no doubt in my mind, I trust them. If they don't pay you out, let's say you followed the rules, you did everything you're supposed to do, hit me up and I'll fucking pay you out. That's how much I trust them. I guarantee I'll pay you out, no joke. But you have to show me proof. Obviously, I'm not just gonna blindly say, "Oh, you did," you guys show me you actually traded how you're supposed to trade and all that. All right, so Bullnox is the first company I got a really fat payout with. This company really changed my life. This is the first kind of like lower priced funding company I found with really minimal rules. And I was able to catch a CPI trade. And needless to say, it changed my life. So right now they have 94% off of all 250K or option one 250K accounts. That yes, 94% off for a 250K account. It's about $33. It ends on 12/6. I do not think 250K accounts are your best bet. I suggest you go with a 50K account. And if you want to do that, 72% off, which comes out to about like $35 for a 50K account. Use the code King72 and King250K for that one. Apex Trader Funding, 71% off of all accounts and half off resets. And it ends 12/31. Use the code Proven50. These codes are subject to change, so that's why I introduced my website. Take Profit Trader is an amazing company. Their payouts are fucking blazing fast. I even got my last one. I requested it on a Friday. I didn't think I'd get it till Monday. I got it Saturday. So to my PayPal. And I did it like Friday night at like 7 p.m. or something. I thought there's no way I'm gonna get it, but I ended up getting it. They have 50% off of all accounts. And then it's a lifetime discount, meaning as long as you don't cancel it, if you fail it, let it get rebuild, and this sale still applies. So once you pass, you get a free account. So if you pass 5, you get 5 free accounts. If you pass 10, you get 10 free accounts. There's no limit on this. Top Step, you guys know about them. Great company. I'm about to be funded with them. Trade day, a little bit tougher to pass. I still haven't passed one of these, but I have met with the owners and I do trust them. I met with them, had a really long Zoom conversation with them. So I definitely trust them as a company. All right, Big Trader, they have straight to funded accounts, which is, they're pretty cheap, especially if you use like for 50K, you use Proven 50 or Proven Direct 50, you get $100 off the 50K account. So definitely check these companies out if you want to get funded. These are companies you can trust. And since you guys watch until the very end, you're my peeps. You're my ride or die. So I'm gonna hook you guys up with a chance to win a free 50K Bullnox account. All you have to do is subscribe to my channel, comment below, and answer these 2 questions. If I post a new video, do you watch it? And then what would you like to see more of on my channel? So subscribe to my channel, like this video, comment below on that, and then subscribe to my newsletter. It only takes like 30 seconds. Go to my website, verifiedfundingcompanies.com. And once you're on the homepage here, go to this right here, verified trader funding discounts. And then put in your email. It takes like 30 seconds, whatever it is. And then push subscribe, and that's it. That's all you got to do. There's nothing else beyond that. And that will get you into the giveaway. Just commenting does not get you in the giveaway. You have to actually answer the questions. I appreciate you guys. If you want to learn more about how I trade, check out the playlist in the right hand corner now.